6 years ago, Ellis Hammond's entire mission changed. He was a full-time college pastor with vision and passion, but broke. Now a full-time real estate entrepreneur, Ellis is the founder of Kingdom Real Estate Investors, the #1 community for faith-driven leaders impacting the world through real estate investing. If you're a kingdom-minded real estate investor or entrepreneur seeking to advance God's kingdom outside the church walls, welcome to the Kingdom REI podcast, where Ellis interviews Christian entrepreneurs and investors focused on advancing God's kingdom through real estate investing. Enjoy the show.
Hey, welcome back, everyone, to the Kingdom Real Estate Investor Podcast. I'm your host, Ellis Hammond. Got my man, Cameron Roy. What's up, Cameron?
What's up, man? Nothing. I was just telling you guys I'm loving. It's raining hard in Dallas, and it hasn't rained in over 60 days here today. So kind of on cloud nine, even though it's cloudy and gloomy outside right now.
It's interesting. One of my business partners was actually praying for rain in Texas today. Actually, that could be the answer right there.
That's biblical, man. You have not because you ask not.
The answer.
Ask.
I'm sure there's a lot of people in Texas praying for rain, though. So,
there's a lot of people.
I'm sure the collection of prayers have been heard. Cameron, for those who are just maybe first time listeners, man, what the show is about. Why you love the Kingdom REI podcast.
Yeah, this show is for Ellis and myself to bring on awesome guests who are doing particularly great things in real estate with a kingdom mindset or a kingdom impact or a heart for bringing heaven on earth in the way they do business. And so honestly, I feel like we have the best house or seat in the house, just getting to listen to these wise folks we bring on.
I agree. I love that vision, man. Heaven on earth. I mean, that is what Christ prays, right? Thy kingdom come, like your kingdom come or will be done. Like there's something about the kingdom coming to earth. And that's what we get to do as kingdom entrepreneurs is really, it's why I hate that view of like kind of all things are burn up at the end. It's like, well, what about that prayer of like us as entrepreneurs? We're really called to create and usher the kingdom of God today, not just save souls, die, and go to heaven. It's like, no, we're called to cultivate and create and use all that we're doing. And I think a view other than that really lessens the impact of what we as entrepreneurs get to do in building businesses and real estate and stuff. So I really appreciate that vision. That's great. So guys, today we just have the privilege and honor of speaking with a friend, a colleague, a fellow mastermind member, Mr. Sam Sells. What's happening, man?
Hey, what's up, guys? Thank you so much for having me on the pod.
It's awesome. About time, man. Long time coming.
Yeah, it's been a long time coming.
So we're going to get into Sam's story today and just how, what him and his company have been up to. And they've done a lot of deals and probably got some really good stories as well to share. And this idea of clean energy and what does that mean and clean money and really using real estate for an impact venture. So I'm excited for you guys to hear Sam's story and his journey into this. But first, guys, let me just pray as we always do, and then we can jump in. So Father in heaven, thank you again for today. And we just pray that your spirit, the Holy Spirit would come, would fill our lives, would fill our minds, would be present with those listening, that you would be magnified, Father, and that you would just, even as Cameron just said, that God, you would give us the vision, you would give us clarity, you would give us wisdom on how we can leverage all that we have, God, that your kingdom would come and your will would be done on earth as it is in heaven. And we lift this up to you in Jesus' name. Amen.
Amen. Thank you.
Dude, Sam, so tell us a little bit about Wild Mountain. What is Wild Mountain? What are you guys doing today? And then and then we're going to just back up, man. So, but give us kind of high level who you are and what's happening today in your world.
Yeah, thank you. So Wild Mountain Capital is part of kind of a conglomerate of companies that we started back in 2018. And we'll go back into, like you said, we'll rewind the tape here in a minute. But what are we doing right now? So we are solely focused on taking highly distressed multifamily properties that have been neglected. Seriously neglected. So they're 60% occupied. The most we've ever bought was an 80% occupied property. But SWAT team was there the day we closed. So it's just like these properties, because we look at investment as the leverage that we can use to create social change, create social welfare. And so in the sense that we can go out and do good and be good and return an amazing return to our investors at the same time. It is not easy. It is not for the faint of heart. It is the difficult road. And so we name Wild Mountain Capital in the sense that we're taking a road less traveled. We're climbing the mountain, but we're going to get there.
Does everyone in your company have to grow a beard?
They do, even the women.
If you guys aren't on video on our YouTube channel, Sam's got a great beard, and so it goes with the. I always think his logo should not be of a mountain, but it should be of like a silhouette or like of you and your beard. I think that would actually be a stronger logo. But we've debated this. I've not won the debate yet.
Yeah, you're making me feel insecure about mine, Sam. I'll probably go shave after this podcast.
Cameron, you literally look like a baby. You know, I mean,
when I didn't think so, and then a guy like Sam comes on, I'm like, yikes, that's not.
Oh
good.
man, you just see some of the partners we work with. One of our partners, it just got this massive, it's like 18 inches of beard, and it's awesome. It's just awesome. But it's like maybe I'm Samson and I can't, I can cut the top of my hair, but if I cut my beard, I lose all my power.
Yeah.
So I'm gonna write down some notes. You're focused on distressed assets, heavy lifts. I'm curious about that. I want to come back to that though, and we'll back up a little bit, just because we've talked about this. Like we have different models, and we focus on different tenant bases, and it's one of my investing rules that we don't go after what you guys are going after, right? So that's an area that I want to just I want to hear more from, and even hear your explanation. So I'm gonna write that down. We'll come back to that. And that's something that kind of a little teaser for some folks to hang on and even wait on to hear why Sam and his group focus on those type of deals. So back us up, Sam, man. I want to hear just your journey into real estate, and was this something your family was doing? Is this how did you become a real estate investor, and especially a pretty heavy value add real estate investor?
We grew up poor. My brother likes to say we were mud babies from Oklahoma. If you grew up poor in rural Oklahoma, you'll know what that means, because there's so many ponds. We swam in ponds and got muddy, and our underwear turned red because the red clay there. And it's just like, we could go on about that, and I'm sure nobody wants to hear about that stuff. But it was a great childhood. And I didn't know I was poor until somebody in school said, hey, you're poor. And you're like, oh, what?
Right.
It's just, this is how life is. And so we were always, at the beginning, we were attracted to those get rich quick schemes and so forth, that you see all over everywhere. I'm glad I didn't grow up in the internet era. I don't know how anyone decides what is true and not true sometimes anymore, because it is so compelling. But real estate kept coming to us. And so we got into construction and started working on homes and flipping homes. And then I joined the military after I'd worked in construction for a while and was helping other people flip homes. And while I was in the military as a firefighter, I had all this extra free time and started flipping homes with a friend, and then flipped homes with a partner. And that was in the early 2000s. And so really had done that, made it through the 2008 crisis just fine, but still looking at high density places in town, distressed assets, kind of that mentality that you see on the shows, but the shows glamorize it and make it look like it's super simple. And it's not.
How did you, dealing in those kind of distressed assets, still make it through the 2008 crisis just fine? You kind of like passed through, like that was no big deal. Like people got destroyed. Like, what do you mean?
Yeah, people got destroyed. And I'll say partly it's because we just didn't have very much.
Okay.
But mainly because, we were buying homes at $50,000 a piece in downtown San Antonio. And so when we flipped them, we were going to sell them for 130. The 2008 crisis happened. I mean, I had 2 homes for sale when Lehman Marcus fell, And so as the capital markets crashed, both of our deals fell through. They were both under contract. We were selling them both around 130 grand. And so we just backed up and said, okay, let's put it back on the market at 115 because things crazy. One of them sold right away. So yeah, we lost $15,000 of potential profit, right, but we only had 75 grand in the house. So we still made 40 something thousand dollars off that deal in 3 months.
Makes sense.
And the other deal, we ended up holding onto that property, turning into cash flow rental. I made $350 a month for about 10 years on that deal. until we sold it.
So, okay, so cool. So you left the military, or you were doing this in the military. That was just kind of like your retirement after the military, right? Doing
Yep.
this focus, and then things begin to evolve. Like keep this journey going.
Yeah. So, military, I got out, got my degree, came back in, really had been drawn a long time ago. So way back when I was a kid, I thought I wanted to be a doctor and work in third world countries and help people. And so I wrote in my journal, and I can share this with you guys because you're, because of what this podcast is, but I wrote down like, Lord, if you help me be able to practice medicine in third world countries or overseas, I'll do whatever you want. I'll dedicate my life to you or whatever. And so I realized though, as an adult, that I really didn't like being in hospitals, and I didn't really want to be a doctor. My mind was just very business focused. Like, how do we improve? How do we do more? We can do more. We can do more. So I went and became a healthcare administrator, and then got into global health, got a master's degree in global health policy, and spent years overseas working with some of the poorest of the poor, like from Afghanistan to Sub-Saharan Africa, Chad, just you can take some of these places away to Nepal, to, working with foreign Liberia. I could just list off a whole bunch of places. So what I learned, and to bring it back to the gospel and business at the same time, is I'm sitting down, we're talking to a guy who's in charge of like 6 different clinics. He wasn't supporting them, wasn't providing them anything. And I'm sitting there listening to him, and I'm saying a prayer in my mind, in my heart, and thinking, how do we get this dude to do something? 6 years, people have been coming and talking to him and helping. Americans have been trying to get him to support his people across the region of the country that he was in charge of. And I got this impression, align his incentives. And so I said, hey, Dr. whatever, if you provide more people, then that means you have more people underneath you. That means the value of all your clinics are more. If you provide more support, that means more people get treated. So now you got more people getting treated, you got more people doing work, you have more training underneath you. That's a lot more value, and that means you're a lot more important. And you're going to be able to go to your bosses and say, I need a raise, because now I'm not in charge of 50 people, I'm in charge of 250 people. And when he just paused and he looked at me, and I was speaking through an interpreter. And then he just kind of sits back, and I just see the wheels go, and it triggers, right? The next day, we call one of the clinics as we're asking them, hey, how's it going? Blah, blah, blah. And like, you would never believe it. Dr. Sajadi called me and blah, 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 blah. And it was like, oh my goodness, the world changed. And all of a sudden they started getting all their supplies. They started getting medical training. It just completely changed. And ever since then, I've thought about the government's trying to force feed people stuff and give them stuff so that they can become better. But if you want people's lives to get better, align their incentives so that they know that, provide them the keys they need or the access to the things they need, but align their incentives and they make it better. And so did that for years and years, came back, knew I couldn't go start my own charitable organization, 501c3, whatever, and go out and do medicine, because that's just such an expensive endeavor. We looked at, where does health all come back to? And it's the home, it's the family. And so we said, okay, let's back this thing up and let's focus on housing security, but in a way where we can make a lot of money for ourselves, for our investors, and do a lot of good at the same time and improve housing security situations. And if we can do that, if we can prove to people that you can make money by improving other people's lives, just like we did with Dr. Sajadi, when he figured out his incentives were aligned, the world changed. And if America's ever going to fix the affordable housing crisis, it's not going to be the US government. They can do policies to make it better for investors. However, it's going to be private citizens. So let's do it in a way, and let's make money doing it.
That's really good, man. This is really bringing up some good questions too about private versus policy or private versus government, but maybe even what policies can we support. So that's part of your why too. Then, I mean, it was seeing kind of extreme poverty in a third world country and realizing, hey, there's kind of a structural need, and this is my passion. I mean, folks that are in extreme poverty, right? And ways to really support and help them. And that's kind of, seems like that's a thread throughout your story. You were, red underwear poor, you spent a lot of time in another country, and it's really a passion for you.
It's a passion project. And it has to be, because it is so difficult sometimes to take a property and change it, because you're changing culture, you're changing lifestyle, you're taking governance that wasn't there, very non-existent, and you're changing it. And people sometimes get upset. You have to kick people out of the property because, look, you're not safe. You cannot be here. If kids can't play in the playground because of you, you have to leave. I'm sorry. And I'm sure there's some haters out there saying, no, everyone deserves a house. And they do, just not in our apartment complex. They can go someplace else.
Yeah.
And so it's a bit of a struggle at first. It is not pretty, clean, or whatever, but it's totally worth it.
Yeah, I mean, as a real estate investor, I think that's the tough thing. Like, how do you want to be extremely profitable, right? And yet you have this business model where it seems like maybe margins are thin, especially for folks, that are in this level. Like, talk to me how kind of creative ways you guys have worked with inside of these apartment buildings and turning homes, and to do that, right? To become profitable, abundantly profitable, and yet work within like a margin that is tight. I mean, that's kind of the reality.
Yeah. So apartments in general are tight. And when you come into a complex, it's almost, we treat it like a development project. And so we tell our investors, look, don't, first year one, every dollar that comes out of that property is going to it's reinvested into it, or it's just going to be really tight because it's negative at the beginning, because we're buying it at 60% occupancy. It's not even clearing debt. The people are in the hole. Liens got to get paid. Whatever. So the upside is that we're buying it at a significant discount. So we're generally about $1 to $2 million less, or under the appraisal, the appraisal on the property when we buy. I say that over the last 4 or so properties, that's about where we've been. So there is instant equity. It's just, you're not going to turn around and sell it for that price because everyone else is going to want a discount because it's super ugly. So the first year we come in, let's talk about I'll back up. How do we make it happen? How do we make the margins work? We work with nonprofits. We work with boys and girls clubs. We work with lenders who will provide us a huge CapEx budget in the beginning, $2 million, $2.5 million at the beginning of the deal. We have our own construction company. We have our own property management company, because we have to generate profits throughout the whole machine, or save money throughout the whole machine to generate the profits that we want to do. In the end, the margins are fantastic. It just takes a little while to get there.
On average, Sam, in the past few deals that you've done, I don't know if you've gone full cycle on any of them, but I know a traditional value add deal that isn't that rough. People, pitch, hey, 3 to 5 years, here's our CapEx. We're going to increase value by this, and, start accepting offers in year 3, and may have to hold it till year 7. Like, what are you pitching? What are you guys anticipating? How long it takes to actually realize, your efforts to put that property in a place where you want to sell it?
Great question. The smaller ones, we bought a bunch of smaller properties when we started. And so those properties are all either hitting the market soon or will hit the market relatively soon. Investors far and away should be in the 30 percentile average annualized return. Some of them will be much higher than that. Some will be a little bit lower in the 20s on the average annual return. Now, they didn't receive on those particular deals, most of them, not all of them, most of them did not get annualized cash flows because we're only a year or 2 years into the deal, and it was just a big, heavy lift. We've learned over time, because we made a lot of mistakes, because I didn't hire a mentor in the beginning, and I should have. So folks, hire Ellis as your, or Cameron as your coach. Just saying, save yourself years of life and gray hairs. The, so we're buying much bigger deals. And because we own our own construction company, we can knock out 80, 100 units in 8 months, get those things on the market. And that's when it cash flows. So if we can do that, then a year turns around and we're into positive and people start receiving funds.
Mm-hmm. I'm curious on what like KPIs you're tracking outside of kind of revenue KPIs, Sam. Like, so you have your own construction team. Do you guys have your own PM team too, or is that property management team as well? Have y'all built that, or is that third party still?
No, we built our own because third party, we couldn't get any third party that would work with all the nonprofit organizations, Boys and Girls Club, police department, all the different things.
Right.
I went to Jesse's my brother. He runs a property management company. He and I went to the city council in Fort Worth and talked to the city councilor over a property we're buying. And, to Cameron's point before, what do you tell people? How long are you going to hold? Well, that one, we should cash out 90% of the equity at year 3 and then hold for another 6 or 7 years, because the city wants us to hold it longer than 4 years because they're tired of syndicators coming in, fixing a property, flipping it, backing out, selling it to the new guy. And so the constant change of ownership, constant things keep going up and down, up and down, up and down. And it's caused a lot of issues in the city. So they're pushing people to hold longer. And I know I didn't answer your question there, Ellis, but
no. Well, my question is that what internally and outside of revenue KPIs do you have relation? Like, I'm curious on kind of how you guys judge success or determine success outside of, what Cameron was asking in terms of return of investors, with your passion being these communities. What are you guys like? How do you determine success? Do you put KPIs to that in terms of what your flips actually look like?
Yeah, great question. So we spent a lot of time thinking about that, and now we put those on our website. So we think about the number of communities we've changed. We think about the amount of money we've spent on these properties that gets pumped into the community. Because if you're spending $2 million on an apartment complex, you've employed a lot of people in that area, right? A lot of people. And so that's money getting pumped into the community that wasn't going to get pumped in there before. Millions of dollars. We talk about lives changed. So we look at number of units we've renovated, how many people have gone into those nicer renovated units, and it's still at affordable rate. How many people's were in the apartment complexes and now their lives have been drastically improved. We have some video footage we took last week, people talking about last 6 months from before the previous owner and now with us. And it's remarkable the things that happen. Now that's really feel good stuff, but it's quantifiable in the terms of your loss to lease is lower, your turnover is far lower because people stay, right?
I'm thinking about a story. I'm just on your website too. Changing lives. It's cool. So you're tracking like $4 million spent on positive change, 21 communities improved, 5,000 residents impacted. That's cool. I like this. I like how you're kind of leading with that too. It's different. I think I remember a story. We bought a deal in Kansas City, and ugly deal for sure. A long-term owner, 30-year owner, and so clearly, when you have an older person, own this deal for a long time, pretty heavy distressed asset, that rents are low, right? And in order to make this deal work, you're going to have to come in and spend a lot of money, and you can't not spend money and not raise rents. That's a that's a dead formula of how to stay alive. Right.
Yeah.
And so that was our plan. Like, we're going to go spend money and we're going to raise rents.
Yep.
And, which is the plan on all real estate, by the way. But I think when you are doing this in more of a community that, they're already kind of maybe below the poverty line, or there's a little less of a margin, it's more focused on, well, what about the people? And so I had a lot of investors worried about that. And I remember saying, listen, we're doing a value to this community. Like, it is not being well run. It's not being well maintained. Like, trust me on this. Like, we're not going to go and just kick people out. We took over this asset. First off, like 10 people just left because they were like illegally living there. We had like a property management person like running a furniture store out of a unit. So like a lot of investors were worried about kicking people out. I'm like, well, next, we're all already like 80%, we're at 20% vacancy right now. It's like, well, okay, that wasn't an issue. And then we started turning units. And what was so fascinating was that, we would get these units done. They're starting to look really good. We're cleaning up the place. And the people living in the property who stayed were actually coming to our leasing office and saying, hey, when is that renovated unit going to be ready? And when can I move in it? And we're like, well, listen, your rent's going to go up $350 if you move in that unit. And they're like, it's okay. Like, we just want a nicer place, And so I do think, there's to realize we're not increasing price that doesn't equate to value that people ultimately want. And I think that's really key.
I've seen it 1,000 times now. Every unit we renovate, a lot of those units get filled with current renters, which is great. That gives us more units that we can renovate. People want to live in a nicer, cleaner, safer place. They just do. And once they have that sense of community, they don't want to leave the community unless they have to. And so they have friends and their lives they want to improve their lives. And $350 a month, that's, a few more shifts at work or something. If you need it, they may already be cash flow positive enough that they can handle that.
Yeah. Do you see families move into it? Like, do you see like families joining units in your communities or like, to maybe make up for that?
Oh yeah. Yeah, we've had zero issue filling units across the portfolio. We have 1,200 or so units. So we're still small, but I mean, so for example, South Glen, past 6 months, we filled 60 units. We still have a 60-person waiting list of people to get in. We take vouchers. We take Section 8. The key issue that people, everyone's always focused on Section 8. Oh, it's terrible because those people bring cars and junkie and all that stuff. No, it's just governance. The big concern is government is super slow. So rent always comes in late, but it comes in one big check. So, it just messes up the accounting a little bit, but it comes, it comes every time.
Yeah.
Sam, real quick, I have a question about your debt service because most traditional syndicators, especially people who are new in the game, trying to figure out, how to get their foot in the door, they're, in my belief, hearing a lot of things of like value add. And when they're learning the terminology, it's like, you need at least 1, 2, 5 debt service. So if you guys are not even clearing one, how are you guys doing that? How I guess selective are your lenders? Because someone hearing this may be inspired by your story and have the same heart and like, what, I've got a hard take on product like that, but I'm just starting out and I don't know, like, one, how does that dude even, get debt on a deal that can't cover the basis of the debt?
Yeah, I will tell you at the small. So if you're going to go try and buy an empty apartment complex and you've never done this before, just plan on paying cash. Finding debt on an absolutely empty place is impossible. We were fortunate or blessed to be able to find folks that were able to give us debt on, one was like 12% occupancy. It was 12% note, which is extremely high. And we took us like 8 or 10 months to clear debt service, right? To get to 1-to-1 and then, trying to finish it off so we can go hit agency level debt. You just expect it to be difficult. Now, on the flip side, if you're doing an 80%, 180 unit property that fits all those things you can take Section 8 vouchers and so forth. There are lenders out there who specialize in that stuff and their debt terms are fantastic. And
and there's a difference too. I mean, to your question, Cameron, is agency bridge, right? There's a lot of bridge products that will base their underwriting on your future revenues, right? So the 1.25 DSCR requirement is really for agency. And so, there are some bridge lenders that will help you bridge that gap as you stabilize the property, to Sam's point. And there are a lot of great competitive lenders out there who will help make that possible. But yeah, I mean, especially if you're a first time borrower, and like you're really distressed asset, like probably forget about it. I mean, it's not going to happen. I mean, I take that back. I mean, there are hard money, if it's a smaller deal, there's some hard money guys that, will charge a lot because they're taking on a lot of risk for that. So there's stuff out there like that.
Partner with somebody who's doing it until you've got some under your belt, and then you can go to the lender.
I'd also say don't start there though. Like that would be my opinion, right? It's just easier money to be made if that's your goal. But I mean, I know this is a passion project. This is part of who you are too, your story for you, Sam. But I think for someone who's just interested in getting involved in real estate, it's a hard area to start. And I think that's what I wanted to kind of wrote. I was writing some questions down. I think I kind of getting the story behind this of you enjoy this. This is tied to your story and what you feel like guys called you to. But to Cameron's question, do you recommend other people? Like, what is your sell to get into this? Like, or do you think others should kind of get into this area type of value add real estate investing?
Let's talk big picture first. If we're ever going to solve the affordable housing crisis, we are going to have to go after these older projects where it's a whole lot less money to repair them, put them back into a clean, safe place that's nice and affordable. It's far easier to do that, and it makes the numbers work a whole lot better than it does to build brand new $300K a door apartment unit and then try and lease that out for $600 a month. You can't make the numbers work on that. And so then you need heavy government stipends and so forth to do that. You can make older products very, very nice inside. It doesn't have to be granite countertops. It can still be really nice. So that's globally, a lot of people need to do this. I can't do it all by myself. You can't do it. All three of us couldn't do it all. If I had $10 billion of real estate, I still wouldn't be able to do it all. There is so much out there and so much opportunity. Now, if you're a young person or a new person, young in this game, I would highly recommend you buy assets that cash flow, because if not, you can go into bankruptcy really quickly, very fast. And so that's a very hard road to go down if you're trying to buy negative cash flowing assets. And if you're going to do that, come talk to me, because you're going to need an excellent business plan and a way to execute that business plan.
No, I think that's a good word. So what is this clean money? So we were talking, you just got a new Instagram tag, Clean Money Sam. By the way, if you're not following Clean Money Sam, I actually just I went to go look at it again, and now you're the first post on my feed, Clean Money Sam. Wild Million Capital is not just focused on return to our investors, but it's focused on what impact is felt at the property to our residents and the community. Wild Million Capital, good quote there. So Clean Money Sam, everyone on Instagram, he's got 54 followers, and so
dang,
it's after 1 week, yeah.
Yeah, 1 week though. That's right, man. That's right. 54 you didn't have a week ago. So go and give this guy some love at Clean Money Sam. You even see a picture of the Kingdom REI community on there. So I love seeing that, and you speaking, which is cool. So guys, go check him out at Clean Money Sam. So what is that? Like, what are you trying to communicate with this idea of clean money?
Yeah, so I like to say that investing matters. How we invest matters. Who we invest with matters. When you invest in the stock market, you have no idea where that money goes. When you buy Bitcoin, who mined that Bitcoin, right? Do you ever stop and think where the trail goes? Did it come from Mexico, from a drug cartel that's mining all this stuff, and they're making money off of that, and they're using it to do hits on families or whatever? You can go down this road of it being just terrible, but honestly, you have no idea. And so to me, clean money is the idea that we can invest in a way that makes a difference, that is socially conscious. So we care about our future. We care about the future of America. And look, that doesn't mean you have to invest in distressed assets, right? So when you guys buy apartment complexes, you're not rude, terrible property owners, right? You care about the asset. You want to create a nice community. People from the poorest of the poor to the richest of the rich, we all need to have good people around us. We just simply do. And so to me, clean money is the idea that we can invest in a way that makes a difference, a positive impact on the world, just like clean energy has a positive impact on the world, just like clean eating has a positive impact in the world. This is the idea that clean is that we can do things without all the dirt and grime and filth that comes with it.
I mean, yeah, I mean, I totally agree. So it's more so of clean as in like pure, like this is, we can be capitalistic and yet be kingdom minded.
Absolutely.
Yeah.
There's no better mechanism to improve lives of the general populace than capitalism. There just isn't, right? It's been well proven across the world. Now, is capitalism perfect? No, that's why we have rules and government and everything else. Does it always get it right? No, but it's the ability for us to improve lives. So a farmer is improving lives. He's producing the best quality vegetables or fruits he can create. Great. That's improving lives. I like good quality vegetables, right? But in real estate, the idea that you buy a property and spend as little as possible, you extract as much money out of the residents as possible, you jack the rents, you provide zero value. That's kind of like the mantra of a lot of real estate investors out there, right? I saw a guy, he's all over YouTube and LinkedIn, and there he was bragging about how they bought a property at $50K a door, raised rents, sold it for $100K a door 6 months later. And you think, man, that's an awesome ROI, but he just screwed a lot of people because there's no way he improved their lives.
Yeah, in 6 months.
Yeah, I'm probably exaggerating there. It's like 8 months.
Yeah. So if someone's listening to the show right now, they have a heart to do missions. They really want to impact people's lives. They clearly interested in real estate because they're listening to this show. They want to go bigger though, right? And they want to go do bigger deals. Where does one start, Sam? Like in terms of they want to merge this idea of clean money or impact investing alongside of real estate. Where do you think in today's environment, in today's economy, where things are at, like where's a good place to begin to really kind of profitably merge those two passions?
Great question. If you want to take this route, then please reach out to me. And there's a lot we could discuss, from locations of these assets to get started until you're profitable and you have a nice nest egg or reserve that you can go into really tertiary markets and use those funds. I know we talked to Garrett, who's gone in tertiary markets and made a fortune in tertiary markets and gotten free cars too when he buys properties. There's ways to do that, but there's certain principles that need to be followed. I look at the world and say, God made principles that we have to follow to succeed at things, right? If you want to have a successful family life, you have to love your wife, you have to treat her with respect, and you have to listen, or your spouse, right? You have to. Those are principles you have to follow. If you don't do those things, you're not going to be successful, period. Right? So talk to someone like myself who's gone through and learned those principles, because once you know the rules of the game, you can succeed and you can win. If you don't know the rules to chess, you're going to lose every time. Your opponent's going to, dominate. And you have opponents in real estate, as nice as everybody is, or as most people are, and as helpful as people are. You need to learn the game. You need to learn how to succeed, and then go do it. And you can do it anywhere in America. You can do this in Tulsa, Oklahoma, or Perkins, Oklahoma, one of the towns I lived in. There's no apartments there, but there's houses there. You can do this anywhere, same principles, but you have to follow the principles of success. If you don't, you will not be successful.
Sam, where to, just on that point, where do folks go to maybe connect with you, learn what you offer?
Yeah, reach out to me, Instagram at Clean Money Sam, LinkedIn, Samuel Sells, my website, wildmountaincapital.com. You can send me an email directly, sam@wildmountaincapital.com. Always happy to talk with folks about this and how we can change our paradigm and how we invest. Still make a lot of money doing it, but let's just change how we view what we're doing.
Last thing I want to, anything you got, Cameron, as well. You talked about policies earlier, like what, instead of just waiting on policies, like what policies, in terms of this idea of affordable housing, can we or should we be supporting as Kingdom real estate investors? Anything worth kind of noting on this show today of like, is there things out there or things maybe behind the scenes that you can bring light to that maybe we should be supporting or we should be trying to bring up?
Anytime you start looking at affordable housing policy, if there isn't incentives in those policies to help private citizens to improve affordable housing, then that policy needs to be heavily scrutinized. What happens is that the government controls the whole thing. You're going to get $500,000 toilet seats, and it's not going to be very beneficial. It's not lasting. It's not sustainable. If you want lasting, sustainable policy, it's got to be informed by actual activity on the ground, by people who are engaged in it and know how to keep costs low. Private citizens know how to keep costs low because it's coming out of our pocket.
Dang, that's wise. Good words, Sam. You're a smart man.
I've emptied my pockets many times.
No, I think that makes sense. I mean, it's just like, going into, I mean, I'm sure you probably learned this in your, ministry in those third world countries, is like, you can't be this, like sustainable solutions are not the white man coming in and saving, the
Whoever,
third world, right? You know what I'm saying? Like, it really has to start from within, and really giving power, just as you use that story of giving power to the people who are present and allowing their creativity and to really spur those ideas. So I think that makes a ton of sense. Well, dude, I enjoyed this, man. What do we not cover? Anything else that you want to share with this community before we get out of here today?
I just want to share that I believe humans are inherently good, and that if given an opportunity to do good, and they understand that they can do good, they would rather do something that is good and helps other people than do something that is just completely selfish. I hid my light under a bushel for a long time, never share this. We just wanted to do it all internally because I was just afraid that people would reject that message. But now I'm happy. If you reject it, fine. But do good, invest in a way that matters, invest in a way that's clean, care about who you're investing with and how they are using that money.
Sam, as you were talking, this came to my mind. I took a picture of it the other day. That's why it's fresh. I was reading through 1 Peter 3, and 1 Peter 3, 10 through 12 says, whoever desires to love life and see good days, let him keep his tongue from evil and his lips from speaking deceit. Let him turn away from evil and do good. Let him seek peace and pursue it. For the eyes of the Lord are on the righteous, and his ears are upon their prayers. But the face of the Lord is against those who do evil. So on your note to do good, that's also backed up from the Lord. So pretty good wisdom to follow, y'all.
Thank you for sharing that. Awesome. That's perfect.
What verse was that?
That's 1 Peter 3, 10 through 12.
Oh, thanks, man. Guys, I hope you enjoyed this. If you want to get more time with guys like this, no, we have, this is Kingdom REI. Like, we have a mastermind that really supports. If you're like, man, I want to be around more people like this who are thinking, doing deals like this. This is who Kingdom REI supports. We have a mastermind. Go to oneconnectionaway.com and learn about our, we'll do another webinar sometime here soon to talk more about that. Love to get you more information. But just know that there are other people involved in this, doing this already. You're not alone. You don't have to go pave the way. Guys like Sam, guys like Cameron at the Common Good Fund, myself with Symphony, right? We're trying to figure this out and trying to pave a way. So invite you to come join us. If you enjoyed this episode, take a screenshot wherever you do social media, post it. If you're on Instagram, tag at Clean Money Sam, and
Yes,
so
please.
let us know that, what you're enjoying about this. We love your feedback on this. And we look forward to having you continue to listen. Guys, thanks for your time today. I appreciate you joining.
Thank you so much.
Cheers.
All right.